JEPI pays for you to own it. Monthly income, lower volatility, option premiums rolling in. But here's the real question. What actually happens over time? Does it protect you in drawdowns? And if you reinvest the dividends, does it quietly compound or stall out? Today, we're not looking at marketing. We're running the numbers. Full backtest, full drip, partial drip, no reinvestment at all. Let's see what JEPI really does to a portfolio, so stay tuned. Welcome back to Simply Money. For those who are new to the channel, thank you for joining us. What we're doing here is we have a hypothetical. What if we took our full income portfolio, $525,000, and we invested it into JEPI, J-E-P-I. Now, we've done this in a series. You can check that out on the link above, where we look at different funds. And the reason we chose $525,000 is because several months ago, we had someone say, hey, what if you took your portfolio and had gone in on X fund? What would it look like? So I did a video, and it had a lot of people like that. So we continued doing those, and we keep the $525,000. So if you watch one video and then watch another one, you can really compare and see how they've done one compared to another, kind of the apples to apples comparison on the amount that is being made or lost in each of these funds. Now, the percentages always stay the same. If I put $5,000, $50,000, or $5 million, it's going to be the same percentage of growth or decline on all of these. But seeing the dollar amount really does help out. So that's the reasoning behind that. For all our returning viewers, thank you for coming back. I appreciate your support. If you like these sheets, you can get a copy of the JEPI drip in the link below at Buy Me a Coffee. All of our sheets are available there. I appreciate those who buy those and use them and the support that we get from that. So thank you very much. Let's dive in. July 1st, 2020 is when we're starting. We have a little more data on this one. A lot of these funds we've been looking at, we're lucky to get a year, maybe 2 years. We're coming up on 6 years, about 5.5 years that we have of JEPI. The buying price at that time was $50.74. That got us 10,347 shares. That's where we're starting. Let's look at it. Coming down, we have column A, the dates. This is a monthly paying fund. Each month, we'll see what the price was, and we'll just scan down. We can watch that. We see we got up to $62 in the end of 2021. Then it started dropping a little bit. Then it came up in 2022. The beginning of 2022 hit almost $63. Then remember, 2022 was a tough year. And look at that, we got down to $51. We were still above where we began, but we had declined from its high quite a bit in 2022. So how did it recover? A lot of people say covered calls, you lose your upside. You may lose some upside, but how did it do? Did it recover? As we come down, we see it started climbing back up. 23, 24 were pretty good years. And we were able to get back up to $60 here in the end of 2024. 2025, it dropped down a little bit. And now we're ending at the beginning of February 2026 at $58.42. So from beginning to end, it is up 15% in those 5.5 years. Not a huge gain, but it has appreciated about 3% per year on average. Again, some years it was down, some years it was up. But you're not into JEPI or these other funds for pure growth. This is a fund that you're looking at having income, but also having some upside. And that's what you've seen. You've had a little bit of upside. You've stayed with inflation. You've offset inflation with this. Our distributions have fluctuated. You can see 49 cents, 28 cents. These are a little bit more fluctuating than some of the other funds we've looked at, like QQQI, SPYI. Those funds so far have shown very consistent, but they are newer. They haven't been here as long. But even in the beginning of JEPI, it was bouncing around 49 cents to 28 cents, 50 cents. And so it's bounced around quite a bit, got up here to 61 cents, and then now it's back down into the 30s. And where we're ending, let's look at 2026. The last couple payments, 37 cents is what we've been looking at. That's fine. And we're looking at this as first scenario here, column D is what if we got these distributions and we just reinvested them? So this first distribution would have been $5,112. We would have bought more shares. And here we track the accumulation of shares. And so we went from 10,347 to 10,448 because this $5,000 bought more shares. As we come down, you can see there's a lot of fluctuation in here, 5,000, 3,000. We'll get down here, $2,900. And we have a $7,000 one in 2022. But as we come down, you see that it is going up because you're just reinvesting. You're getting all these new shares. So even with lower distribution amounts, you're getting more and more distribution in your paycheck. But we're buying more and more shares, and we keep buying more shares. So we come down here in this 5.5 years have distributed $373,000. So you've added 6,500 shares. Your portfolio balance would have gone from the 525 up here to 985, just shy of $1 million. Total return would have been 87%. Your portfolio has grown 87% in that 5.5 years. Not horrible. And again, you probably wouldn't be reinvesting fully for this long, but if you did, that's where you would have been at. Now let's go over here to the 50-50. You're taking half of the distribution and spending it for income, and you're taking half of it and reinvesting. And a lot of people use these income funds and they'll reinvest a portion of it and keep a portion. They reinvest a portion to help offset stock price decline, or if it's flat, to help build up to offset inflation, to increase the amount that they get. Different reasons, but with this fund, you wouldn't have had to do that, but we're just going to look at it and say, okay, we take half of the distribution, which is shown right here. This amount is half of what you get. So you take this amount twice. The $25.56 is cash. You're using that. That's your income. And you also get $25.56 to buy more shares, which we show over here. You can see we went from $10,347 to $10,397. You didn't gain as many as you did on the full drip because you only used half of the distribution to buy more shares. You used the other half to live on. Again, you'll see this increasing because you're still adding shares. As you come down to the bottom here, you've received $161,000 in cash. Over this 5.5 years, you've been receiving cash month in and month out. Here at the end, you can see you're getting about $2,200, $2,400 each month. And you're also using that amount to get more shares. So you've gained 2,800, almost 2,900 shares. You've received $161,000 in cash. Your portfolio has grown by $246,000. So that's a pretty good scenario for me. I'm getting this income. I've received $161,000 of income. And in the meantime, my portfolio is up 47%, $246,000. I'd be happy with that. Now let's look over here at the zero drip. And now here we have the amount that you get distributed and you keep it. I'm taking all the distribution and I'm using it to live on. And so you get this 10,347 shares. You don't buy any more. Whatever distribution is, you just take it and you're living on that. Now with this fund, obviously, if you were doing an all-in scenario, you'd want to balance this really good and budget. Now, this is not financial advice. This is for informational and educational purposes only. And a reminder, I am not a financial advisor, and I do not recommend you go all in on JEPI or any fund. I'll make that clear. I'm sure I'll still get a comment down below saying, what an idiot. No one would go $525,000 all in on JEPI or any fund. You're right. I wouldn't, and I hope you wouldn't. That we're not doing this to encourage you to do it. We're showing you what this amount would have done and what our portfolio would look like if we had done it. I would never do that. I am a diversifying type investor, and I'm a buy and hold type investor. And so this is not for advice to say this is what you should do. This is just to give you an understanding. And, what if we put 50,000 in JEPI? And we'll show you that here in a minute. But this is why we do this, just to see how the fund has performed and to see with some data, do we want to add this to our portfolio as a portion of our portfolio? With no drip, you're seeing that your distribution really fluctuates, 5,000, 3,000. 2,700. Come down to the end here. Let's see, we've pretty much stayed in there. The lowest about 2,700 and the highest about 5,500 throughout this whole time frame. So it's been fairly consistent. Over this time, you've received $285,000 over 5.5 years. That's not too bad. It's a nice income that you're receiving. And if you look over here, your portfolio has still grown 15%. You're up $80,000. As you've been taking all these distributions, your portfolio has stayed in the green. You have watched your portfolio. It went up quite a bit, and then it came down some during these price fluctuations. But over 5.5 years, if I was retired and I was taking this income and living off of it, my portfolio is still keeping up with inflation, and I'm getting $3,500, $3,800 a month each month. So that is just a scenario. Let's look at our total returns. Full drip, you take whatever your appreciation value is. This is your unrealized gains. We're just buying more shares, letting it accumulate. You're up 87.63% or average 15% annually. That's a nice return. Over 5.5 years, you have averaged a 15% return if you were fully dripping. And let's say now you want to turn off that drip. Now you're looking at getting $6,000 a month versus what you would if you had been taking that cash all this time. That's another story, another time. Now, 50% drip, you're getting your $161,000 of income, and you've increased your portfolio by $247,000. You have to add those together. That's a $408,000 gain, or 77.83%. So living on 50-50 on this drip, you would have had a total return of 13.5%. Again, really nice, getting income and getting a nice return like that. All right, now let's look at zero drip. You've received all this cash, $285,000, and $80,000 in unrealized gains in your portfolio balance. That brings your total return $365,000, or just under 70%, or average 12.10% per year. Again, very strong, taking all that income, and your portfolio has grown slightly. So you are looking at a 12% annual total return with this taking the funds. Now, what are your thoughts on this? Do you like JEPI? Do you own JEPI? Are you doing a full drip or no drip? Where are you at with it? And what is your reasoning for doing it? Do you hold it for income or growth right now and then income later? Let me know in the comments below. Now we're going to look at our calculators. This calculator, you can choose the percent you want to invest. So we chose 15%. We're going to reinvest 15% because we want to outpace inflation a little bit. With zero drip, we basically kept even with inflation. We're going to up that a little bit. So instead of zero drip, we're going to drip 15%. The rest, this 85%, is going to be our income. We increase our shares here. And as you come down to the bottom on this scenario, that we were able to take $252,000 in income, and we gained 789 shares, and our portfolio grew $125,000. With that, that's where you can just project, okay, I want to increase my portfolio more, whatever you want to do. This really works out more when you're looking at funds that have a declining distribution and you're trying to keep that flat or growing. So you have to maneuver this a little bit. With this fund, you still made money if you took all the distributions. We're just using some different numbers. You can change, if you get this sheet, you can change the date that you start, the amount you invest. You can play with this calculator, what percent you want to drip. Then you also have this calculator here if you just want to do a flat dollar amount. Let's say on this, I want to do $3,000 each month. I'm taking $3,000 regardless of what the distribution was, and then the rest will reinvest. So this first month, you see we reinvest $2,100. Second month, we only reinvest $27. Let's see, down here you can see we actually would have had to sell a few shares, and that is reflected here. It looks like we sold 2 shares to get $3,000 a month. You can play with this just to see, okay, I want $3,000 a month, or I want $300 a month, whatever amount you have. You can put that in and see how would my portfolio do. For 5.5 years, I'm getting $3,000 every month, ends up at $204,000, and that puts us at $249,000 that we still grew our portfolio by adding 2,900 shares and also seeing a slight share price increase. So those are the different scenarios you can do with JEPI on this sheet. All the sheets have these available for you, whatever fund you want to look at. This is back testing, looking at the data from the past to where we're at today. What would it look like in different scenarios? And I'll do this just for those who like seeing a smaller number because they're like, I don't have $500,000. You're fine. We'll go over here. Obviously, you can't take 3,000. We're going to take that to 500. I put 50,000 in. I want $500 a month of income. What happens? Well, every month I've gotten $500. Some months I've had to sell shares because the distribution wasn't enough. Other months I've added shares, but I'm still getting $500 every month. At the end of this time frame, we've added 18 shares, so not a lot. We've received $500 a month, or $34,000, and we increased our portfolio by $8,000. Again, you could do 400, you can do whatever number you want here, and you can change this if you want to put 30,000, whatever you want to put there. That is how this sheet works. I appreciate your support. If you like this video, please hit the like and subscribe button. And I appreciate you joining me. We'll see you next time on Simply Money.